All right, hey, what's going on, everybody? That time. What a gift, huh? This is a really nice day, all things considered. I mean, it wasn't as good as yesterday. Yesterday was really a lot better, but if you manage to get it, you know, take what you can get. I was just talking to somebody about this particular price pattern, I guess if you want to call it a pattern. Oh, you're not that late. I just started. You're right on time. I I'm not a big fan of trying to trade within this range. And um, I'm not picking on him. The person I was talking to about this, it just seemed like a good thing to talk about because he was having questions with it. I'm sure others have questions with it. So why not talk about it, right? Unless you guys have a topic that you do want to cover, then we could do that. But so I was talking to somebody about this, and if you look at what had been happening on the day, we had really good, clean price action all morning, right? Until we got into that. And when we got into that, everything changed. There it is. My pen wanted to quit on me. Quitter. There'll be no quitting. Okay, now go away. So nice, clean price. We were actually going somewhere, and then we got there, and the market went in balance. So when we're moving, we're out of balance, right? Price is chasing after something, or price is being pushed, and it moves, and it's clear and it's clean, and we're going somewhere, and then we get into this, and the market seems content to stay there. Longs are happy, shorts are happy, everybody's accepting of the current price. We're not mispriced or out of balance in any way. This can sometimes be called a draw, and then we call it a raid and a draw. If we just have the draw, then we just have the range that we're in, this really tight little range. What we're seeing with this pop out, that might be a raid. Think of liquidity up here. We could be raiding that liquidity before we dump, or we could just be, coming out of this low and going back. Raid and draw can get confusing. So, I wouldn't get focused on that too much, but the person that I was talking to was trying to go long off of this low, and I don't blame him. The move really does seem to be done. In the morning briefing, I talked about 69.32 is likely where we were going to go, and we could overshoot it a little bit, but that I wasn't overly negative, and that after this move down, we'd probably stabilize, hold the range, and or begin to go back up. So why not try to get some longs in there, right? The problem is after the first try, which failed, but you wouldn't know it failed, right? Like if you were trying to get in on this low right there, you wouldn't know that we're going to have a range yet, right? Because we don't have a range. Once it failed and it came back down, but it did not continue to go lower, now you've got a sneaky suspicion that we might be developing a range. And then as it continued to play on, you get more and more of an idea that yep, that's a range. We're in lunch. I don't expect price to expand during lunch. We're in a really tight range. It's about 12 points wide, and we're holding that range for a considerable period of time. Now you can try to play this on these breakouts, but there's no there's no momentum here. There's no push. There's no pattern. There's none of this, right? None of it. All that's gone. You just have this trash. So if you attempt to try to trade breakouts in this, it's very likely going to fail because you're looking for some big thrust that tells you that the imbalance has begun. We're no longer content at this level, and that there's either something pushing price or price is chasing after some mythical level, and away we go. So if you did want to play it, say you're convicted that it's going to go higher, get it along the lows. That way, you've got a clear line in the sand, right? It'll be the low of the bar or the low of the range. So if you get in anywhere along those lows, wherever you can, then you've got a really great place to put your stop. And the closer you can get to the low, the smaller your stop is, right? So it's defined for you. Then on the push up, if the push fails and stalls out, so what? What do you care? You got, 5, 7 points. You let it take you out off of those highs somewhere, and you try it again the next time it comes along those lows. If you're convicted that it's going to go down, just flip the whole thing over and try to get in along those highs and use those highs as the place for your stop. So the closer you can get into the high of the range, the smaller your stop will be. And then run it to the downside. If it fails to break out, so what? You at least get a couple of points. You can close the trade and look for another opportunity, because when it finally does break, you're already in it. You would be in somewhere along these lows. You ride it up on the breakout. And now, since your entry was below the resistance level, that resistance level is now your support level, and your entry is down here somewhere. A lot safer, a lot more protected. I don't like to play these, by the way, but I have played them, which is why I came up with this style long ago for solving this problem. What if I went in because I'm really convicted? How do I do it? And to me, that's how I do it. When I tried to do it the other way, trying to buy the breakouts or sell the breakdowns, that inevitably didn't work, because which one of these is going to be the real breakout? Who knows, right? And of course, whenever I would try it, it wasn't the right one. And then I would lose again and I'd have to try again. And so this way, if it's not the right breakout, if it's not the real one, you at least get a couple of points, which in my opinion is way better than losing a couple of points. Give it a shot. It doesn't work. Try it again. You still get a couple points each time. You can get day done just failing to get a breakout. And then, you're gold. Go do something else. So it's worth considering. But really, my approach on this is to not even bother with it, anyways, right? Like, once it's clear that we've developed this uh, balance and we're in range and it's really tight like this, I'm not interested in it at all. I'd rather just wait either for a better opportunity or find another product, because I really just wouldn't even want to mess with it at that point. To each their own, right? I bet if I put that on a 10-second chart, it would probably look really good. But I don't want to trade a 10-second chart. If I did, I would bring up my jigsaw or maybe swap over to Bookmap or something like that. That way I can use their 10-second charts and 5-second charts. But not really interested in that anyways. Not a scalper kind of play for me. So what are y'all doing today? What do you want to focus on? Any topics, recommendations? Let me bring my trading view over to this computer. I had it running on the other side. I was looking at a potential legged in iron condor for Amazon. It has the opportunity to become a risk-free trade. Always like those. Yeah, I should have saved my chart before I swapped computers. It'll be in one of these. Yeah, we haven't done one of those for a while. We could certainly do that. We got a lot of bricks in the wall of worry. That's for sure. Yeah, that's what I was looking at on the other computer. All right, so this is Amazon and it's an automatic drawing, right? I didn't draw that, but as you can see, it's a Head and Shoulders. We are looking at Amazon on a daily with TradingView in this tool that is drawing price patterns. The BE is bearish engulfing, and then the D is dojis. It's just a indicator that's highlighting candle patterns, right? The hammer. And so, of course, Head and Shoulders have measured moves, and they're not, in my opinion, Head and Shoulders are not really high probability trades um, with the targets and all of that. But if it has a destination, then you can, start to play the trade. I was thinking about a legged in iron, probably $10 wide, collecting 550 in credit is what I had built out using a 240 230 short call vertical or a call credit spread or a bear call spread, whatever you want to call it. Any of those three, it's the same thing. So the vertical would be this wide. It has a break even point of 235.50. So we would need price to get to and under 235.50. The reason we got so much credit in this trade is because we're building it outside of where price is. Normally when people put on a credit spread, they put it, on the call side they put it above, or on the put side they would put it below, and that usually, risks 4 to make 1 or risks 3 to make 2. In this scenario, we're risking like half. Well, it's not quite half, but our risk to reward is skewed in our favor. It's it's not 1 to 1. It's a little bit in our favor. But we need price to move. So we would need price to continue to fall, break 235.50 and get underneath there before expiration. And the reason I'm looking for a legged in iron and the reason that I built it with the strikes that I did is I wanted, or I needed, at least half the width in credit. So it's a $10 wide trade. I need at least $5. We got more than $5, so that's cool. But I needed at least 5. If I wasn't worried about legging in, then I wouldn't care. And we could probably shift that break even up into like 237, maybe 238, right? And then we could build it like a $5 trade, collect $2 in credit, risk 3, and have it around that 238 area. But that's not what I was interested in. If we can leg into this, we can turn the whole trade into a trade that can't lose. I like those trades, right? Having a trade that you can't lose, you could just stack it up, throw it in the corner, and after a while, you build up a whole portfolio of these trades that they just can't lose, right? There's absolutely no way for them to lose. Which is why you can slowly end up with hundreds of trades that you have open. And then people say, I don't know how you're trading hundreds of trades at once. Well, there's no risk. I don't need to babysit them. They're fine. They're not going anywhere. Can't hurt me. I don't even need to pay attention to them anymore. This would be the start of one of those. It would have been better if we'd have caught it on the reversal, but I wasn't watching Amazon, so I missed that reversal. It's a really nice 3-bar reversal, you got to admit. I mean, that is very pretty. So it has reversed. We got the big gap down today. It's likely that it's going to pause soon after making such a big move in 3 days, but um, that's okay. As as long as it gets below that 235 and a half. And what I'm looking for is to work our way down and get into this 225 area. I would like it under 225. And then we want to put on a put credit spread down here somewhere. And in that put credit spread, we also want to make it $10 wide, and we want $5 in credit at least. So I built this trade in Thinkorswim. I'll show you half of it, the first half. This is the call side, right? 550 in credit, 230, 240. That's when I built it. What's it worth now? 2 pennies? 3 pennies? Yeah, we'll leave it alone. So if that was the original trade, the risk is $4.50, right? That's what all this is, $4.50 of risk. And the zero line is really clear. You can see it plain as day. If things were to go wrong and we don't continue to fall, then we've got risk. If we was to move down into that 225 area, I'd like to put on the put side here. And I just grabbed one of these. It probably wouldn't be this, right? It'd probably be something like a 230, 220. Depends on when we put it on. But we would want at least $5 in credit. So I built one out on the put side. I used $10. I just put a price in that. And if we do that, this is what we end up with. Now, as you can see, the zero line here, the entire trade is above the zero line. It cannot lose no matter what happens. So if it sits in the sweet spot, well, great. We're going to make some pretty good money. If it breaks out of the sweet spot to either side, then, we'll make some of this $85 in credit. Sounds good to me. Now, this is a short duration trade now, but as long as everything continues to work on the call side, there's no rush to put on the put side. We can roll the calls. If we get, say, into February and we're not losing, but it hasn't really fallen that much, then I'll probably kick these Februaries out to late April into May. And then we'll see if we can get those puts put on at a later point. That's the nice thing about the versatility of this trade. As long as you've only got one side on, then you can just keep adjusting that one side until you're ready to put on the other. And once you put on the other, well, then it's risk free and you don't have to worry about it at all because it can't lose at that point. Metals and mining are just going bonkers. And everything that I've been looking at for 2026 says it's not done yet. It's crazy, right? Like it still isn't done yet. There's a really good ratio chart that I think is worth looking at when it comes to gold and silver. I might have to bring up my stock charts account though, because I don't know that we can see it on TradingView. Let me see. Check my notes. What are you guys trading today? You guys focused on earnings, banks, and all that good mumbo jumbo? I think it's in here. Where's it? It's compact. That's not it. Put call ratios, gold. Now we're getting into gold notes. There we go. Wait, that's gold miners. Not it. Not it. If we see them come in and defend Japan, that's very likely going to be a good time to trade long bonds. But until then, I don't really think you want to try to go long bonds. No. I know it's so tempting, isn't it? Oh, what you get? Let me see. That'll give me something to focus on while I'm looking for my darn notes. Archer. Yeah. You got $10 calls, 25 cents a piece for February 20. So $10, not too far out of the money. You got about 1 penny wide on the bid ask spread, which is really nice, right? You look at some of these others and it's 15 cents, 12 cents, 3 cents. So 1 penny difference. That's good. I don't have the volume showing, but considering how tight those are, I'll bet that's where a lot of the volume is. Sure enough, look at that. Lots of volume in there, which is why we have that really tight bid ask spread. Um, it looks like they're trying to build 9 out now, although I'd have to check. Maybe they're unwinding the 9 strike, but they're definitely loaded up in the 10. I like it. Makes me wonder where they're at on the other side, and they're not, right? They're at least not in this time frame. Oh, where are they hiding? Okay, we've got the $10 strike and the $15 strike on the calls. Those are for January. And then April, that's January. Let's get a color for February that really stands out so that we can spot it easy. I don't have that color showing anywhere. There they are. Okay, that's February 20. So if they were hiding in the puts anywhere, it's not February. Turn these off. That makes it a little easier. Ouch, that's rough. $8 slippage. What I was looking for is I was trying to find the short puts that I really suspect that they have. The play is they're probably selling puts and then buying calls, right? I mean, that's the way I would do it. And so I was looking for a high concentration of puts that isn't using the January timeframe, right? Let's turn those Januaries off, make it a little bit easier. So there's April, and it does make sense that they're farther out in time because those puts aren't going to give them much credit. So they need more time on that so they can get more money for the calls. It makes sense that they go farther than February, March, April, something like that. These April puts kind of highlight well. And the overlap here, there's two expirations with a really high time frame right there. That really, I bet that's the one. Okay, it has January 15 in it, but also June. I'll bet they're hiding right there. So they're probably selling those puts and they're spending that money to buy those calls. Yeah, XLE is probably going to have a pretty rough year, all things considered. We were low, right? Low on that. So, nowhere to go but up, right? And they were adding back with the strategic petroleum announcements. If you saw, there was a draw, there was a build, right? Last week, this week, they're what's the word? Restocking, resupplying, because they liquidated a lot of their surplus a while back, and so they're building back up again. So they're buying adds to that move off of the low in energy that you're looking at. But energy is so generic, right? XLE, and uh, and it's not quote oil. I think you're better off with XLE because the data centers, everybody connected to data centers says we don't care where the energy comes from. We don't care if it's solar, wind, oil, butterflies farting. We don't care. Just give us energy. And that would cover XLE, right? The broader space, just give me energy, XLE. So I like XLE better than I like crude. Globally, crude's a declining asset, right? Like it's slowly being phased out of society. So I'm looking for a chart. I haven't given up. It's my gold ratio chart. And if I can't find it, I'll just go build the darn thing. It's fine. I think I can do it in trading view. Yeah, I'm gonna have to do it in trading view. Fine. Yeah, no, that ain't it. All right, let's just go do it. So with this Archer trade, the clock is ticking, right? Because you got the Feb 20. So kind of got to get the thing. You're already past the last earnings. Now it's just the issue of the next earnings. And of course you're very likely to be out by then anyways. The thing about trading those out of the money calls in the situation that you're in, and this is not about right or wrong because you didn't do anything wrong. That trade is fine. I want to make sure I say that because I'm not picking on the trade. I don't think you did anything wrong. It's just an approach, right? When I buy an option, calls, puts, I don't care what it is. If I'm buying it, it's because I have a expectation that we're going to move. So I want clear skies. I want an open path because I want to see movement, right? Something that looks like that, something that looks like that, like that. I want clear movement. When we're inside of a range or a box, I don't have that. I can't even expect that because to get that kind of a move, first I have to get out of the box. Getting in before the move is a really good thing. I am not a fan of watching it break out and then run in there and try to chase after it while it's already running. I would rather do what you did and get in now before it breaks out. 100%. I hate chasing. In fact, getting it on the red day like yesterday, I would even rather do that because then you'd get even better prices on the calls, right? So getting in before the big run, I'm a big fan. But I would have done it in a spread simply because we haven't broke out yet. And we're going to have to get through that resistance. And when we do break out through that resistance and start to run, they're likely going to vol crush this thing like crazy. They're just going to suck all the volatility out of it. And volatility is money. So when they suck the volatility out, they're taking your money out of it. So it's going to depreciate from the collapse of volatility. And then there's the time decay issue. Each day that goes by, it bleeds more, right? It bleeds theta. So the option is just bleeding value. But if you had turned it into a spread, then you would shunt that decay and kind of protect yourself from it. Then there's the strike. If you had bought an $8 call rather than a $10 call and the trade doesn't work, while the $8 call was probably more expensive, it wouldn't lose as badly or as quickly. But if we reject this high and we turn around and we start to fall, that out of the money $10 call is going to just get completely destroyed with almost no recovery opportunity whatsoever. Your chances to roll it, salvage it, fix it, do anything with it are going to go downhill really fast, especially if the move happens in the overnight hours the way it usually does, right? And then we get screwed because it was after hours and we couldn't even do anything with it. But if you had the money option instead of the out of the money option, if the trade wasn't working or began to fail, you you have a lot more choices and it wouldn't be such a overwhelming massive destruction to that options price because it would still have money left in it. But that doesn't mean you did anything wrong, especially if the in the money option is $100, right? If you bought a $10 strike for 25, even $30, your max loss is $30, right? Like win, lose, draw, who cares? It's never going to get worse than $30. You're fine. You buy that $8 one, well, now you're on the hook for $135, right? And what if this was Google or Apple or Tesla? that could have been $1,030 rather than 130. So sometimes you're better off just getting the out of the money option anyways, just because, like, well, you've defined your loss at 30 bucks. So what? That's as bad as it's going to get. And your dinner tab was probably higher than that, right? So, you know, sometimes that's just the better choice. But really consider the use of verticals to protect the other side of that trade. Yeah. Skip a meal to pay it off. Try to put the other side on in a vertical so that you can protect yourself from the decay. Because if you do put on the other side, you could actually, go in the money a little bit. I'm going to try to build something with the same risk that you had. Yeah, there's $34 right there using a 9-10 strike. In this one, I'm buying a -1 and I'm selling a -1 theta. I'm buying a 19 and selling an 18 gamma. And then the delta, that's what's going to get us 53.35. The difference between that is where your money's going to come from. But you've got some protection now so that when it gets volatility stripped, you're not going to get hurt. When the theta decay kicks in, you're not going to feel it because you've completely isolated yourself from it. Still like it. I like it. That's the one. XAUUSD. XAUUSD. And silver. We'll have to just rebuild this thing. XAGUSD. All right, I think I got it backwards, but that would be the ratio, right? So let's try to rebuild that the other way around. That's the one. All right. This is gold, silver in a ratio. Look at the thing. It's just completely bonkers, right? But but we've been there before. I'll just keep zooming out here a little bit, and I got to turn that goofy indicator off. Go away. Too loud. There we go. Okay. So I'm on a monthly just so that we can zoom back and we can see, like, there's been some other levels previously. And this is a ratio. At the start of last year is when we were really talking up the idea of getting that gold reversal. And if you've heard it before, my theory about double bottoms are that we have to exceed the previous low with a new low. Otherwise, it's not a double bottom, right? It's more likely a cup and handle sort of scenario. So this was our low. We had that little wrap around, and it was either going to be a cup and handle or a double bottom. Double bottoms are bear traps, so we're looking to go higher. If it's an upside down cup or an inverse cup and handle, then we're looking to go lower. I define the difference between those two as whether or not we overshoot the previous low. If we overshoot the previous low, I'm more inclined to believe that it's a double bottom and we need to get into the 111 and then we can flip and we can run. And that's exactly what we got last year. And then it's been just ripping ever since, right? So then we start adding like trend lines and trend line breakovers. So there was the big trend line breakover. We got there and digested and paused for like a week and a half on the weekly and the daily. It was a little rough. And then just rocket science after that, right? It's just been going and going and going. Look at what happened when it got to that high. This one, it didn't even blink. So then we got up into this level. That's really where we kind of had some issues at this spot. That's where we got this really big wick here and it pulled back quite a bit. Closed there. And then in the next candle, it just went up and up and up and up and up, right? So we're still on the run and it's not done yet. Now, we do got to be worried about a potential halfback scenario. So we'll just run this up here and we'll put this down at the bottom. See the issue? We're really close to that halfback. Yeah, I'm thinking we're going to pause there, but just a pause, right? Like we're not done. No, 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 no. Gold and silver and copper. I don't think we're done with copper either. They got a lot to offer still, but we've already gone so far. We've broken records and we've made moves that we shouldn't have made in record time. It's gonna be a violent ride, and there's gonna have to be a pause and some digestion. But if we get through that level, it's game on all the way back up to these levels. Think about how 2025 went in gold and silver, because that's what 2026 looks like. What if we pause for a year? I mean, what's a year among friends, right? That's 12 of these candles like that. That's like 1 year right there, right? So we could get here and we could pause right here for a whole year. And then 2027 would be the year that we get up there. Or we could just get there and come right back down again. Do one of these, right? Or one of these. But don't jinx it. Knock on wood. So if you're in gold and silver, just be mindful that we're coming up into a serious inflection point and that you're likely to see drama. But everything so far that has been attributed to the reason why we're making these kind of moves in gold and silver and copper, those whys are still there. You know what I mean? Like price patterns says, who knows? When we get there, we could reject it. It could all just dry up tomorrow. But the macro side says that everything that caused this is still in play. And if that hasn't changed, then demand hasn't changed. And if demand hasn't changed, this isn't done yet. I like it. If you want that chart, it is, I'm going to post it in the chat for you guys. Don't get it backwards like I had it a moment ago. You can use the backslash, or I guess it's a forward slash. XAG USD forward slash XAU USD. And if you want to do nat gas, it's XNG USD. But whatever. Who cares about nat gas? Natty's nasty. Let's see. Copper. I don't know. I don't really have a good copper ratio. Copper was my 2025 play. The whole year, I just bled in that thing. I did good in the stocks. You know, like I had a couple of copper stocks and copper miners and that. I did okay, but this ramp into the end of the year, I got the heck out of there. I took the money and ran. Yeah, I can do that too. Um, there's so many ratios, you know. It's certainly one to keep on the radar. I need to get it off of this. This is a particular saved chart that I don't want to keep here. So I'm gonna get it out of here. Just put some random stock on there. We'll just make a whole new one. There we go. Just like that. It's on the monthly. Got to open the layouts and see how which ones are my ratios. I have my icon distribution set a certain way. See, the macro charts are the little roadblock looking signs. The morning briefing is these little puzzle pieces. And the ratios are the magnifying glass. That's what it is. That way it gets put in the right spot. I was working on putting in a new indicator for the Thinkorswim Discord. I didn't get it done yet, but I was listening to a market replay of Minthor Q, and they were talking about how they overlay SPX call wall, put wall, all that stuff onto their ES charts. Because I continue to argue they should not advertise that they have options on the futures or options levels on the futures because they don't. At least they didn't at the time that I was using their stuff. But they would sure tell you that they do. They'd say, "Oh yeah, we got ES levels," but they really don't. They're taking SPX options levels and they're laying them on top of the ES after they normalize price with a math formula. Well, during one of their live streams, they happened to actually say what the formula was, and I wrote it down. So now I have the formula to take a call wall or a put wall or whatever from, SPY, SPX, and lay that on top of the ES charts. And then, of course, if you have the code to go one way, you can recode to go the other way. I do a lot of ES levels, right? Like my morning briefings, all of that stuff. It's all done in the ES. And every day somebody wants to know what that equates to on SPY or SPX. And with the formula, now we can do that, right? So I got it coded into Thinkorswim and probably TradingView so that when I share that spot gamma chart in the morning, not chart, but the spot gamma code, right? Every day I share that Thinkorswim text document. There it is. Nah, it's flow patrol. This one. Spot gamma, thinkorswim levels. The plan is going to be that you take that every day and you update your thinkorswim like you always do, but you then add at the bottom of that a little bit of code that you can just keep saved, and you just add that little bit of code and it will overlay onto the ES or the SPX or the SPY the levels from the others, right? That's the plan. But I'm trying to get it figured out where it's not a bunch of work, right? Because I mean, we already have to go in every day and update that code every day, every day, every day, right? That's tedious enough as it is. I don't want to also have to go in and edit the code every day, every day, every day. That would suck. So I don't want to have to do that. The plan is that we can just paste it in at the bottom and then just be done with it, right? Every day, because it's just a set of lines that won't change. And I've got something like that now that I've been using, kind of a little bit as an experiment, but also just for, my own little thing. See if I can. No, not that one. Yeah, see right here. I post the spot gamma code into my thinkorswim, and then I copy just that code right here and I paste it at the bottom. Short, simple, sweet. I don't have to do anything with it, right? I just paste that and I'm good. But this is nothing more than a little label that pops up at the top of the chart. You know what I mean? Like that's nothing. I want to overlay those. Yeah, I'm looking to take see what what Mentor Q does is they'll give you an ES chart and it has call wall and put wall and volatility triggers, and they'll say, here's the levels for the ES futures, the options levels. But they're not. They're not the ES options levels. They're the SPX levels. Well, you can't just take the SPX call wall and set it on the ES. That doesn't work. You have to normalize price first. So if the call wall is 7,000 on the SPX as it was today, and it's 7038 on the ES like it was today, they're completely different, right? So figuring out the math formula to be able to put that call wall on the ES. Now me, I've got spot gamma and I can already do that. But if I'm using SPX, what is the ES call wall? Once we normalize it, where is it? Or if I'm using the ES, where's the SPX's call wall? Like what Mentor Q does. I don't want to have to go get Mentor Q just to overlay that on this chart. It'd be nice just to have it on there anyways. Or where's SPYs? How about we get SPYs options, SPYs call walls on the ES? I'd like to be able to do that. I don't want them on all the time, but it would be nice to be able to turn them on, turn them off, you know. Um, Today we outran that so far that it has no value at all, right? The call wall, like I just described, is all the way up at like 7028 for today for the ES, which has no value at all because we're all the way down here. So, obviously we wouldn't want it on all the time. I seen a question in the questions channel. We're going to try to address. So, anyways, that's the plan. I'm trying to work with the AI to develop this nice little cut and paste that we can put on underneath the code when we bring it in every day, and that we turn it on and off, obviously, because we don't want to leave it on all the time. That would suck. All right, I logged into paper. So if you guys see me getting in or out of anything, just remember it's paper. There's no risk here. Don't follow what I'm doing thinking I'm taking some kind of real trade. This is paper. There was a question about being able to move the order once we're in a trade. So I'm going to just jump in a trade. Doesn't matter, right? Just get in. All right, so I'm in. And now let's say I want a stop. Or that's a profit stop, and now I want like a real stop, right? And we can see that it's a grabbable thing. When my mouse gets there, the arrows change, right? And I can grab it and I can move it. Now, I used the dome to get in. I didn't fill out an order ticket or anything like that, right? Well, the argument about whether or not the call wall and the options levels have value, hey, I'm a big fan. I believe that options are not the sole drivers of the market. So there's entire days and weeks where the market says, I don't give a damn about your call wall, put wall, blah, 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 whatever, right? If today those options levels have value, I want to know where they're at and I want the option to turn them on and off. If today the dollar, bond, yields, treasuries, gold, commodities, news, something else is moving the markets, then okay, I won't care so much about the options levels. I'll focus on dollar yield, bonds, whatever, commodities, right? Because it's not an always thing. But absolutely, there's not one dominant market. It used to be that the options on the futures were so poor, nobody wanted to use them. And they would just use the SPX if they had size. But now things are changing quite a bit, and there is enough liquidity in the futures to make them a viable opportunity. But also, SPX is being traded 23 hours a day, just like futures are. And that, of course, changes the game too. So, yeah, being able to see all three levels definitely adds value. And I chart all three values in that document. So we can just change, I can go to SPY, I have levels. I can go to the SPX, I have levels. I can go to the ES, I have levels. But can't I just stay on my ES chart and see the normalized SPY levels from there and the SPX levels from there so that I don't have to look at three different charts? That's what I would like. This is Tradeovate, and I am on paper. Um, it looks exactly the same if I was on live. So you have a really good idea of what it would look like live or otherwise. You do pay for data. Yes.
I just walked in here. Hey, but Mentor Q's got the equivalent level thing that they do with their trading view and NinjaTrader indicators. So you can plot SPX, and then you plot the equivalent of, and you put in SPY or whatever.
Hey, welcome back, buddy. I know they do because I was talking about how I just stole their code and I'm coding my own version of the same thing for the SPX and for TradingView. You missed that part because you wasn't here. They said in a video what the formula they use to do that normalization. I didn't steal it; it's public, but they said it in the video. They said, "Yeah, we do this with this ratio, and then now we have this normalized price." And
Yeah.
yeah, so I said, "Okay, well, thank you for the code. I'm gonna take that now and build a Thinkorswim version." Yep, that's what you missed. You didn't miss much.
Okay. Looky, it's TradewithKev.
Yeah, there was a question in the questions channel about the ability to move a trade once it's on or to move stops after the trade is on. And I don't know if they're using a support ticket or the entry ticket. I use the dome and I can grab these and move them around no problem, right? So if
Um,
he's using a ticket order, then he says he can't move his or
um,
her. I don't know.
is that a setting? Hang on a minute. Display orders, I think, maybe a setting. I'll look as well.
I think he can see them. He just can't move them. The question is in the questions channel though, if you want to see it. He said he tried it on Apple and Windows. Um, he can see it on the chart, and he's got his chart set to trade mode. So that would be up here, toggling the trade mode on, which means he's very likely using these buttons to get in, not a trade ticket. And I'll use those buttons to get in, and then I'll add a stop manually, right? Like just clicking here, put on a buy stop. No, let's put on a let's put on a sell stop up here, a sell limit order, and a sell stop down here, and I can still grab them and drag them. So I think I agree with Marziti. It might be a setting. The thing about paying for data, don't get hung up on that, right? The commissions are cheaper. The cost per trade is less. So they're going to get your money from you one way or the other. If you stay on Thinkorswim, you get free data, so you don't have to buy it. But if you was to ever want to actually fill an order, then you're going to pay a higher cost per trade, and they will get their money back, right? Plus, there's no such thing as free. They're selling your data. If you're not if you're not buying the info and they're giving you the info, what's that old phrase? If you're not buying something, then you're the thing getting sold. But that ain't how they say it. It's
Yeah.
something about you're the product, right? However that phrase goes. If you can't see what they're selling, you're the product. I think that's how they say it. Let's ask AI. Maybe it will have a short, fast answer to this because I don't remember changing any setting, but I've had this for years, so I wouldn't remember anyways. Right. He's already in trade mode. He is already in trade mode. But he says he can't grab the order and move it around. It says maybe try refreshing the platform, check for updates, or they because there's not necessarily anything to turn on, and I didn't think so. But I mean, you can check settings. I don't remember any setting that says something like that. The fact that you can see them, are you only getting the little dot over here, this little rectangle, or are you actually getting a line also? Because if you're not getting the line, that might be a hint as well that something isn't quite right. Some insight on MSOS. I own MSOS. Of course, I've had it for a long time and I've been selling options on it forever. My advice on these pot stocks is that these are event driven, like most penny stocks are, even though this isn't, quote, a penny stock. This is an event driven thing. Until the Fed and the government gets everything worked out, there will not be a good play here. Now you can, take short-term trades, getting in, getting out, enjoying the love, or you can be a long-term player like me. I'm in it for the long haul. Someday they will get around to legalizing everything, and I just sell options on this to lower my cost basis. That way, I'm at a negative basis at this point, but besides that. So if you want to be nimble and get in and out, sure, no problem. But there's no quote swing setup here. There's either the long haul or be nimble, jumping in and out, being very reactive, and just taking little bites, day and a half, 2 days, and then you're out again. Now that is afterwards, right? Once the trade has been closed, it'll show the trade.
Oh yeah, I guess you're right. I guess you're right. Well, whoever posted it, I don't see it right now because I just walked in, like I said, but I can do a screen share session later tonight around 7 o'clock Eastern. Just whoever you are, just DM me and let me know if 7 p.m. Eastern is good for you. If it is, I'll be glad to uh, do a Discord screen share with you, and we'll walk through the settings and see if we can't sort it out. And we'll do it on paper.
I went ahead and pinged you in the channel where the question came from. That way you can find the question and the person. I
Oh,
don't
there it is. I found it.
I don't necessarily think that there was a setting personally. The only thing I can think of is that there's a little bit of a glitch because I do know Tradeovate has those issues. And they did say they had tried it on multiple devices and just wasn't.
Well, if it's multiple devices, it's probably a server-side setting, obviously then. And so it's something in the screen here. But yeah, for opportunity, I'll be glad to do a session with you. Just let me know a time that's good with you, and we'll go through it. I'll be glad to do that.
It is worth asking, are you using a phone or a tablet? Are you using the web-based app, or did you actually download the real full app on a Mac or a Windows? Because they all three act differently. The phone app or tablet, the desktop version, and the web version, they all act a little bit differently. But on all three, I've never had an issue just grabbing my order and moving it around. It should be just plug and play. But who knows, right? Let's get back to MSOS for a moment. I'm going to get out of this trade here. Exit. No reason to leave that on. All right, MSOS. The question was for a short-term opportunity for the upside. It looked like a 4-hour chart, and a question on whether or not we could get somewhere. Obviously, we're inside this big monthly bar. We had that pullback at the end of the month, and where the midpoint is really matters on that, right? Because that's drama, and we're underneath it, and we're inside of this really big bar. So we're just going to steal that, bring it over here. That's the bar of control, and we're above the midpoint. I know it doesn't look like it, but I'm on a log chart, which will change right here. So look at that structure. We're holding here, and we're trying to start a scoop pattern back up the other way. The concern is the midpoint of this big red bar. So we could hit our head somewhere above 5.5, and between 5.5 and 6, we could hit our head. But it also comes down to why would the pot stocks be running? If there's pending legislation, any sort of comments out of the White House, like what happened here, right? I believe that was Justice Department headlines that caused that little bit of a spike. It might have been earnings, right? Might have been earnings from one of the not obviously not MSOS, but one of the holdings of MSOS could have had earnings and popped us. But this thing normally moves when we get headlines, and that's what you want to be prepared for. What I like to do when I'm playing a niche area like this is to look at something like Seeking Alpha. They have that weekend report where they talk about things that's coming up next week, and they don't just focus on earnings because I mean I can do that on my own. Thanks. They focus on investor events, big um, Las Vegas style conferences, anything like that. Bitcoin has big conferences, pot stocks have big conferences. And so you want to find out when they're going to have these big, multi corporation conferences and prepare for headlines to come out during those conferences that can get you that move that you're looking for. Otherwise, these are just bleeders and they just pop on the news and they bleed off. Plus, these pot stocks, with all the issues with them not having access to funding through banks, the only way that these companies can get money is by liquidating, right? So they'll come in and they'll add more stock, right? They'll dilute their shares. And of course, that means every time they get a move that is decent to the upside, they'll come in and they'll dilute their shares and knock that stock price right back down again. Well, that sucks for us, right? If we want to buy and hold in the pot stock space, every time the stock starts to get any value, they come in and they dilute it and knock the price back down. So if you're just playing momentum, don't use the MSOS because it's the basket of stocks, right? Use a specific pattern or a symbol, like you brought up Tilray. Use that or one of the other companies that has a specific reason to go up or go down and might have individually its own news to perhaps be active enough to warrant an opportunity to trade it. Yeah. There was the 10-to-1 stock split that kind of uh, falls right in line, doesn't it, with our conversation. So this price, it's really 99 cents, right? Because we had a 1 for 10 reverse stock split. It makes it more expensive than it really is. They actually they didn't dilute. They did the opposite. They compressed, they combined, which is unusual, kind of defeats the argument actually that I was just making.
I used to wheel trade Tilray. There was some pretty
I know, right?
good money in that back in the day.
I remember when this IPO'd, it was one of my biggest IPO plays as a new trader. Um, I had been studying the IPO space, and I was really confident about my ability to do IPOs. And then this did IPO, and he was like, "All right, let's do this thing." It was a wild, wild time. I had to go to a conference in Wichita, Kansas, and it is notorious for having construction from Salina to Wichita, and it's a dead zone, no internet. Late in the afternoon, I was in this, lost internet, couldn't get out by the end of the day. Oh, I was crazy frustrated, stuck in traffic because it was construction traffic. It's not like I could just, turn around and get back across the line back into an area where I had cell signal. Oh, it was a wild trip. That was right around the time that Elon Musk did an interview when he was smoking pot, and he was trying to do a deal with, I think it was the Saudis for something. It wasn't Tesla itself, but it was some kind of deal with the Saudis over something. Everybody was in an uproar, throwing a fit. saying that he was unfit to be CEO, and he had announced some kind of deal or made reference to some kind of deal. Maybe it was when he was trying to get X, right? When he was trying to get Twitter. But he made some kind of comment, and man, people were suing him like crazy over these comments that he had made.
That was the comment where it, it flared up that the advertisers were telling him what he could and could not do, and he told them to F off. And he made it very clear that they could go F off. And that just, I mean, because at the time, Twitter made money through advertising, still does. And advertisers were trying to affect policy. And I think a lot of this had to do back when there was this whole uproar about censorship going on. And so with all this roar about censorship going on, and then the advertisers trying to influence policy, and then Musk tells them to go F off, and then Twitter stock starts going up and down and plummeting all over the place, and the board of the directors was trying to get him out of the way. And then, of course, he's smoking pot on the Joe Rogan show. But I don't think he inhaled, actually, but maybe Bill Clinton, he was taking lessons from him. But anyway, that was what that was all about. But in the end, looks like he came out on top of it.
I was thinking of the incident where he had mentioned that he had secured funding, and it actually wasn't secured yet. And so the stock ripped because everybody thought he actually had the funding, when then it turned out he didn't actually yet have the funding, and they were suing him for that false statement, saying you told us that the loan was there, and now you're telling us that the loan actually isn't there.
I remember.
And
Yeah. That may be it. That may be it.
August 7th, 2018, he said, I'm considering taking Tesla private at 420, funding secured. And that caused a surge in price. Investors believed a buyout at premium was imminent, and then it dropped sharply when the deal fell apart days later, and then he got sued like crazy. And it was Saudi Arabia's sovereign wealth fund that was supposed to be the buyout. And then the SEC sued Musk in September of 2018 for securities fraud, alleging the tweets were false and misleading because funding wasn't truly secured. It was uncertain and contingent on too many factors. He settled. He paid a $20 million fine. Tesla paid another $20 million. And then Musk stepped down as Tesla chairman for 3 years while still staying the CEO. And then he had to get tweets pre-approved for a while.
Yeah, I remember that. And, well, yeah, let's be honest. Some people just have control issues.
Yeah.
And, I mean, there are actual mental diagnoses of people that don't understand the importance of what they do. And, maybe he's that. I mean, I think Musk is Asperger's anyway, so I could be wrong. I'm not a psychologist. But it's entirely possible, though, that he doesn't realize the significance of what he's doing. Something that the impact of it. He knows what he's doing. He just doesn't realize the impact of it. That's all speculation on my part.
$20 million. No fun. What's the going rate for dropping the F-bomb on national television?
Not as much as it used to be. I mean, they had, I forgot what it was, but Trump dropped it during an interview with somebody one time. Somebody ran up to him as he was walking out of the White House, or something like that, and asked him about something, and then he said, "Yeah, I know what the F he's doing, blah blah blah." And I think I'm sure they probably bleep that out, but on national TV. But
Trump said it at the Ford plant last night. Someone heckled him from the crowd at the Ford plant, and he said something about stupid F. But I don't think that went out on CNBC. I don't know. I don't watch the national. But yeah, he dropped the F bomb just last night. It's funny you brought that up.
well, Trump is more corporate than he is political, so he's used to language that politicians normally would not do openly. But we all know what they say in private. I mean, they cuss like sailors, I'm sure, in private, but openly, they're saints in public, and Trump's like whatever.
I googled it just to check, and it said if it's a one quick one off, and they don't get a lot of complaints, it probably won't end up in a fine at all, but that it could turn into through 220,000 to 325,000 for every instance. So if you're like just saying F F F F F over and over again, they can stack them up. That's nuts. There was a television station which accidentally aired a video clip. It was visible behind the weathercaster with graphic, visually indecent pornography. It was airing behind a weather forecaster, and they had to pay $222,000 for that one.
Some intern back there having fun with the big screen.
I think they were standing in front of like a bank of monitors, and somewhere on one of those monitors was porn, and they were giving like a weather update, and they didn't realize that one of those monitors behind them was showing porn.
Yeah, I've been in Amsterdam before. It's not a big deal over there to do it on TV. Amsterdam's different there, but I remember the first time I saw it over in Amsterdam, and I knew it was okay to do in Amsterdam, but the first time you see it, you just kind of stand there for a second. You're like, uh, okay,
They mentioned things like Bono when he said effing brilliant at the Golden Globes, or Nicole Richie slipping up on the award shows. Most of those just get slipped right by. They don't even go after people on that one. Like you said,
they make too much money.
times have changed. I was just curious. Back in the day, that used to be a big deal.
Well, back in the day, parents, husband and wife slept in separate beds too. The Flintstones were the first to actually change that, believe it or not.
Got to do it like they do on the Discovery Channel.
I mean, that's actually one of the milestones about the Flintstone cartoon that was the first TV show that actually showed husband and wife in the same bed. Go figure.
No loss taken today, Pedro. You beast.
Good deal, good deal.
It's kind of a hurry up and wait week with these little rodeos inside of them. Um, I'm feeling pretty good. The market's doing what it's supposed to do. Yesterday and today, it followed just like I had anticipated. Everything's on track. But yesterday afternoon turned into trash. And, this afternoon, the lunch range was just trash. So it's getting while the getting is good for sure. And if you look around, there are wonderful opportunities if you're willing to shop between the Nasdaq and the ES copper. If you go over and look at HG, gold, silver. I don't like the liquidity in silver, but gold, copper, oil. There's plenty of places to look. I haven't done it. Hey, Marziti, have you traded the VIX futures?
Years ago. You can do it, but I don't know.
Yeah, I don't, but you can.
Yeah, a lot of people say, well, can't you trade the VIX? Well, most people use the UVXY, um, which is a stock as well as it has options. And a lot of people like the UVXY. I remember when I was on a different service years ago, they used that instead of, because they were all options based, so they didn't use futures for anything. But the UVXY is an option that you can consider. Problem is, when I was trading the UVXY and the VIX probably the same way, is that the daggone thing did a reverse stock split or whatever because it's a depreciating asset kind of thing or whatever. And I was like, my accountant is going to love this, I'm sure. So I got, K1 or something like that, and I just had to hand it over and say, sorry.
I haven't traded it yet because of these values. The each tick is $50. So if you think about the ES futures, 1 point is $50. This one tick is $50. And the size of the tick is a nickel. The size of a tick on the ES is $25, right? So you got 4 ticks in a point, 25, 25, 25, and 25. For 1 point in the VIX, you've got 50 ticks, and they're worth 50 points a piece. $50.
Oh my God.
That's why I haven't traded it. That thing scares me.
Speaking of scare, one of the things that's always scared me is selling options. And I recently started putting my toe in on 0 DTE SPX and selling those. Now I'm doing it on paper while I get it down, to be transparent. But I mean, you can put stops and take profits and stuff like that, but everything's backwards in your head. But it's worked out really well. I wasn't even in my trade this morning for 5 minutes, and I did a 50% take profit. I was kind of shocked.
Yeah, for people that don't know, the price of the options, um, in the world of options trading, a lot of options traders think that the price of the option changes when the stock moves. And that is true to a point, but it's not universal and it's certainly not penny for penny. And if you was to mark the rate of change in how fast an options price changes, there's of course different movements for different products. Tesla moves fast. Um, NVIDIA moves fast. The SPX moves the fastest out of anything I've ever come across. It has the fastest rate of change in its options values out of anything that you are ever going to come across consistently. I'm sure you could find a hot rod now and then, but it'll be fleeting. This has a constant elevated rate of change. It'll be sleepy and slow and boring, and then boom, that thing will run 75% of its value in the blink of an eye, or it'll double in value in the blink of an eye. It's crazy fast. Trading the
Yeah,
SPX
it
is scary.
because I've been doing like uh, Delta 10s, 15s, and there's not as much money in there, so you got to stack more contracts in there, obviously, to get your move, the money that you want. But it's like you say, when it moves, it can move. It's pretty amazing. I've been, like I say, for years I was scared of selling, but then I'm doing credit spreads, and the downside to a credit spread is that your risk reward, you're risking way more, 4 to 5 to 10 times if you take a full loss, and so you got to learn, like you put in an order bracket or something like that to try and keep you from going to, so if I get like a dollar credit, put my stop at $2. I'll take a full loss and try to take profit at 50 cents or something like, or maybe $1, maybe 10 cents or something like that as it depreciates. But it does run. I really would like to do it on the ES, but you can't do bracket orders on the ES, and that just irritates me unless I go to IBKR, and I just don't want to do that. The platform just didn't make any sense to me at all.
I do like selling options on the SPX, but I don't go out of the money like you're describing. I don't mind going near the money, but I'd much rather be at the money with one leg in the money. I'd much rather do that. And I know it's not the preferred way to go because people like having that out of the money buffer zone between them and price. And I get that. But the way the options value changes when it's far out of the money, if price even begins to move towards your strikes, the trade immediately turns red and goes negative. And you don't know if you should close it or not. You're not even in a losing trade physically, but it's losing.
Well, but the thing is, if you're out of the money and it turns against you, it moves slower against you. But when it turns in your favor, it moves faster. Versus being at the money, in the money, if it turns against you, it moves almost equally fast in your favor as it does against your favor. In the end, the real issue is the number of contracts and therefore the number of commissions in the way I've been looking at it. But again, I'm taking my time here to try and learn how to do it. And success has been pretty good so far this week and with it, but it's also on paper, so I'm not that concerned about it. So my credit has been like 80 cents, where I'm looking at yours there around $6. Mine's been around 80 cents or something like that, and I've been targeting a total take profit of $1,000. So I'm going in with like 15 contracts or whatever.
Tasty, at least you cap your commissions at 10.
I'm not sure if they do it on SPX or not.
Should.
I can't. I think they said, because I had this conversation with them, and I think they said that it is not capped on the indexes. Maybe I'm wrong, but I think they said it was not capped on the indexes.
The thing about that out of the money trade is I don't do them very often, and if I do an out of the money trade like that, it's usually after we've already run a long ways and I can see the exhaustion is there. Then I'm willing to take an out of the money trade because it's already demonstrated that, say it made a 1.5% move up or down, I don't care, made a 1.5% move, and that's above the norm for the day, and it's where we would expect the market to stall out, and then it demonstrates the reversal and it falls away or it rises up from the turn. I'm willing to do an out of the money at that point because I can set the trade beyond the highest point or beyond the lowest point, and I can use that as structure. And that is my get the hell out level too. If it crosses that level, I'm done. I don't have to worry about what my P&L is or anything like that. If it set a low on the day and turned and I put my trade on and then it comes back to that low and breaks it, oh, I'm out. I'm done. I already know. So here's an example from Friday. It's not a good example, but at least it has that turn that we're talking about. It set a low on the day here. So if I had put it on and it started to rise up and then it failed and it started coming back down and it breached that low. Now this didn't close below that low, so maybe I wouldn't have got out, but it broke that low and it shouldn't have. I would have gotten the heck out if I was in it at that point. Some of the rules that I run on that, by the way, is I'll do a morning version and I'll do an afternoon version, but I won't do a morning one to run all day and I won't open one up in the middle of lunch. Those are two really big do not do kind of rules for me.
Yeah, I ran one Monday simulated, and I didn't put a stop in it just to see what would happen. And again, it's on paper, so I'm not that concerned about it. Well, it actually turned against me. And I started going deep in the hole. And I was watching it. And I actually turned out hitting full profit because it didn't close inside the wings, and theta ripped it. But to zero. But certainly I would not do that under a normal circumstance. And so, got lucky. Got lucky. And literally Monday, price closed $1, $1 below my call short, and I was doing a call credit spread, and so I got so lucky. But again, it was on paper there, because if it had moved $1 more or plus or whatever, then I would have been red on the trade. But it did go deep against me, and that was okay again, like I say, because I was watching to see what would happen. But the beauty that I'm learning, though, about selling the option is the theta. I'm like you, though. I wouldn't want to sit in this trade all day long, because you're sitting on pins and needles watching this trade, kind of thing. And the other issue, of course, being with the credit spread, is trying to close both legs. It's always a little bit more difficult than just a straight trade, because you've got, for those of you that don't trade options, it's harder to close a spread. Debit, credit, butterfly, iron condor, than it is just a simple directional longer short call or put, because you've got to wait for all the legs to settle in such a way that you get the price that you want, that the math works, that you get the price you want. So it's a little bit more difficult. And in that situation, certain brokers, and we talked about this last night in my webinar, you got to be careful about which broker you're on in that situation. Like, you go with Robinhood, and because their pay for order flow is, they're trying to make more profit in that arbitrage, or whatever you want to call it, that pay for order flow thing. And Thinkorswim might live trading actually close your option, and you're good, and it may not close in Robinhood because they want more money on their side. And so you got to know a little something about your broker. You got to know a lot about your broker if you get into these kind of things, about how they work, how they react, and stuff like that. And Jeremy will also tell you, Robinhood will close one of your legs at 345 a lot of times, and not the other leg. And I think he got caught in a situation one time where they closed his long leg, but not his short leg, and left him exposed. And it worked out. He got, it worked out, but he was furious that they did that to him. I mean, they say that they have the right to do it, but they didn't close the trade. They closed a leg. So again, stuff that you need to learn about your broker on that kind of stuff.
If you're trading options on Thinkorswim, I highly recommend using the dome. It might take a little bit to get used to, but man, it's so helpful. You can see the price of the option. You can see the traders as they're coming in, and they're hitting the buy side and the sell side and stacking orders, and it's fantastic. It's so helpful. It gives you such a clean visual on what's happening with that option. Now, you can build spreads in it. It's a little difficult to do, but I mean, it's doable. I just loaded a single put here, and it's the Jan 14 6910 put. So it's just one single option in this, but yeah, you can load verticals in it. The nice thing is you can see the stop, the order, you can grab it and move it, and it'll show up on the chart. So if I wanted to get out of a long call, say at 69.35 on the stock price, I can move my exit on the put to where whatever put price equals 69.35 in the stock price, because that's where it's going to put my order. And then I can see, okay, well, when price gets there, it's going to get me out of my option. That's awesome because you can't do that from the options chain. Makes it really handy for the SPX on these 0 days. I like to go wide verticals, so $25 wide, $50 wide, and collect somewhere. If I'm $50 wide, I like to get $27 to $30 in credit. Don't always get it. Sometimes I end up on the lower end, $18 to $22. But we're talking, $22 of credit in a $50 wide spread. I have done $100 wide. I was a little uncomfortable. I quit doing those. But $25 wide with $12 credit, that's not bad. I don't like stacking up 30, 40, 50 verticals out of the money at a 10 delta. I've gotten destroyed on things like that. And you think you have everything under control and that it's all fine until suddenly it ain't. When it comes to getting out of those, if something does go wrong and you have to leg out, close the short leg first. A lot of brokers won't let you close that SPX long and leave the short on. They just won't let you do it. So don't even bother, right? Always close the short leg first if you have to split the trade apart to get it closed, and chase price. So if the option is trading for 22.50 and you really want out, give it a nickel, give it a dime, because you'll probably be happy you gave it that nickel or dime rather than have it rip an entire dollar away from you, to where now instead of getting out at 22, you had to get out at 23, and you lost a whole dollar in there trying to negotiate, right? So if you really want out, jump price, take the short leg off first, and don't haggle. Just get the hell out if things start to go wrong. I don't like those out of the money options. At the bare minimum, near the money is more than enough for me, right? And I look at the price of the trade. So if I'm 5 wide, I want to get, somewhere at least $1.75. I'd like 2 if I can get it. 2.25, 2.5 would be beautiful. But getting 2.5 on a $5 wide spread in SPX is rare. It's really hard to do. You almost have to build the entire trade in the money just to get half the width. So if that was Apple or Tesla, sure, you could easily get half the width. But in the SPX, no. SPY, the Qs, no, you're not going to get half the width. You just have to be resigned. $5 wide, get $1.75 to $2. You're doing good with that. And that's a lot of credit. You get 5 of those, you collect $2 in credit, 5 contracts, 5 lots. You're good. Feather them out. It seems like there's risk because you're closer to the money. You're not out of the money, and people like that buffer, but it's an emotional binky, right? It's that pacifier that makes you feel good because your trade is far away from price and you feel like you're safe and you got this buffer, but you're not safe and you have no buffer. It's an illusion. It's mythical. It's a warm blankie, and it's the SPX. So if it wants you, it's going to run you right the hell over, and it hurts.
Yeah, and options, like I said, we had a guy this morning in Kevin's morning stream, new guy, joined the Bullish Bears recently, and he came in, and you're going to understand this story, so hit home. He said when he just gotten into trading, and everybody was telling him about options, or he got into trading a year or so, to whatever. Anyway, death by 1,000 cuts, and with options, and man, did that just ring a resonant bell with me. So Kevin was done with it. It was still running the stream because we were talking, but Kevin was done with his trading. So we talked for a little bit this morning, and I was sharing my experience, and I told him, I said, Signet and I got in about the same time on this, and that's what everybody talked about back then, because nobody talked about futures back then. Everybody talked about options, and I was dying death by 1,000 cuts, and I know you, Signet, figured it out way earlier than I did. But there are people that can specialize in just trading the option chain. They'll sit there and they can watch it, almost like watching Jigsaw or Bookmap, but they're watching the option chain instead, and they can trade on that and never actually look at a chart. I'm a visual person. I have to have a chart. And in that regard, I was talking to them about, in my opinion, you still need to learn price action, technical analysis, learn to make a good entry, learn to manage your risk, your stops, all that kind of stuff. Because all that stuff, it still holds true. Price action and technical analysis is still the fundamental learning that you need to have, unless you're going to be a statistician and just play the option chain itself. And I'll shut up on that.
Well, I've always argued that we could just run one thing. We see it all the time. Somebody will only run VWAP, or they'll only run, a MACD, or they'll only run Bookmap, or they just do this one thing, and they're like, that's all I need. It's all I need. And for a lot of times, they'll sing praises on their setup and say, my system is so awesome. And then that one day comes along that is different than the normal day, and they get their butt handed to them because their system isn't working and they have no other way to register what is happening in the market except their system. And they haven't learned anything else except their system. So when that day doesn't work, they just keep trying and they keep trying and they keep trying, and it just rips them apart.
Absolutely.
And then they say, I don't understand.
And that's the way it used to be with a lot of trading. I mean, I'll call several trading strategies out. The TTM squeeze, man, that thing used to work like clockwork. Then the institutions figured out that the retail traders were working this TTM squeeze business, so they adjusted their model to take the retail traders out. Well, then it was ICT, and man, people were making money hand over fist with ICT. Well, then the institutions figured that out, and they changed their trading model again, and they started wiping out the ICT traders. And that, again, that's something else I talked about last night in the webinar. And institutions change their trading model, and that's why you've got to be able to look and understand. Doesn't mean you need to trade it multiple different models, but in my opinion, you need to be able to see them, and so that you get the bigger picture of what's going on.
There's these particular days where we'll get an outsized move, and I don't mean just a regular move. I mean a real big move in one direction, which is supposed to be a reversal point, and it doesn't reverse. I went hunting for one, and I found one from November 20th.
He's got to close the gap.
When you find one day that breaks the norm, you'll see the chat and people will be like, oh man, I got my butt handed to me today, because they only have this one thing. I'm a pivot point trader. I love my pivot points and my drawings. But when price gets to one of those pivots, it's not a trade for me. And I've seen so many traders who want to be pivot point traders where they're like, wow, Sig, I see you play those pivots all the time. I'm going to go do that. But the only thing they have is this line. And when price gets there, they think, well, okay, well, price got there. So now I'm trading, right? I'm going long here, right? Or I'm going short here, right? Why? Well, because it reached the line. This is the trade now, right? It got there. No, heck no. All we know is it reached the line. What are we going to do with it? We don't know yet. We should check bonds and dollar and VIX and trend, and we should see what's going on in the market. And, oh, I thought it was going to be as simple as marking this line, and then when price got to the line, I could take a trade. No.
Well, I know, and Signa, I know you've heard me tell this story before, but for the benefit of some of the others, there was a guy, I saw an interview with this guy one time. He was a VWAP trader, and he traded when it crossed VWAP. He had a 10% success rate. Now, his profit, but his stops were so tight that even with a 10% success rate, he was very profitable. But you got to ask yourself, can you live with 90% failure rates? I couldn't. That would drive me absolutely insane. But this guy could, and that's okay. And that's okay because everybody's personality is going to be different, and there's no right or there's no wrong here. But there is realistic expectation. You've got to know what your trading strategy is, and you've got to see, does it align with my personality? Because that makes a big difference. I could not have a 10% trading strategy, swing for the fence kind of thing. I couldn't do it. I would be so depressed and so anxious that, oh, this is going to be another fail. It's going to be another, I know it's going to be another, because you start expecting failure. This guy could work it. I couldn't. Not that I tried. I didn't try it. I'm just saying I know me. So, yeah, I mean, Signet's dead on 100% when he talks about this. You've got to know who you are, and you've got to find a trading strategy, and you've got to look at multiples, and you got to look at context. Just because you say, oh, I see a head and shoulders there. Oh, I got to go short on that head and shoulders. Well, if the trend is bullish and you see a true head and shoulders, maybe you're going to get a bearish move, but don't expect it to run like a scalded dog all the way down to, wherever, when you're going heavily against the trend. Context matters.
So when it comes to trading, I know a lot of traders who do that VWAP, or they do the line, the pivot, and they take the trade, and the odds are in your favor if you are managing your money like that VWAP trader, or if you're running a pivot point which has a high win rate, right? Because there's the high win rate plays, the low win rate plays. As long as you're managing your money and you got the statistics and you know that it works, those traders could give up right there and say, I don't want to learn anything else. Every time it gets to VWAP, I'm going to take the trade, and you can do it. I know plenty of successful traders who do it, but those days that come that break your system, you have to learn to know what they look like so that you don't keep trying on those days. When the system doesn't work, you get your butt handed to you once, you trigger all your levels, like, okay, that's it. This is obviously not the day that I thought it was, and you shut it down and you wait for another day. If you can maintain your control and you're managing your risk, then you don't have to become this jack of all trades kind of trader where you've got the knowledge of 70 different approaches and styles and setups. Me, I'm a little bit of a nerd. I like learning new things, and so I'm constantly learning new styles of trading, and I don't use most of them. When I learn a new style, I end up using it more for analysis than actual trade setups, but it gives me another way to read price, another way to see price expectancy, another way to have an idea of what the hell is supposed to happen next. Because that's what I want to play, is what's going to happen next. So if you don't ever want to grow beyond one, you don't have to. You just have to be resigned to the fact that not every day is going to be a tradable day. You might go 3 days without getting one single trade at all because your day hasn't showed up yet. And a lot of traders struggle with that patience. They want to trade because, well, we didn't learn to trade just to not trade. So they'll force trades in a day that doesn't fit. They'll get destroyed because they don't stop. They just keep trying to win back their losses and lose more and more and more. So many repeat failures of the same kind of failure over and over and over and over again that we see cycle through. So learn your struggle. Yours is different than anybody else's, even if it runs on a similar vein. Find out what your kryptonite is so that you know how to begin working on solving your problem. And there is high risk and low risk. And if you're losing frequently, stop doing the high risk.
Yeah, we had a perfect example of what you're talking about here, Signet, this morning. We had an oddball possible news event that has no historical basis or precedent. And that was, there was a news blip that at 10 o'clock this morning, the Supreme Court may rule on Trump tariffs. There's no precedent for this. It's not like a CPI, a PPI, and blah, blah, PCE, that kind of stuff. No, we don't know what could possibly happen. And so it literally was, everybody was holding their breath. I mean, it was like FOMC on steroids. No, not even FOMC. It was more like CPI on steroids. I mean, talk about holding your breath, because no, it was a completely unknown event. But if you did not go out, if somebody hadn't gone out and looked to see, well, what's coming today, and this was, this even was actually marked on Financial Juice's time plot this morning on the left-hand side about the Supreme Court, because if it hadn't been there, I wouldn't have known about it either. But we noticed the market was holding its breath. We could, because I knew about it, and I jumped on the morning stream and I said, listen, this is an unknown to us. We don't know what this could possibly. Now, it turns out they didn't do it. They didn't make the announcement. Or at least not at 10 o'clock this morning. I don't know if they did something later, but that's another thing that you need to understand about being prepared for your day, your knowns and your unknowns, and how that can affect your trade. And then there are just some unknown events that you'll never know about. An event they're not planned, they're not scheduled. I literally never forget the day I was in a trade when Trump came in and shot out a tweet, and my trade just went within seconds. And I was like, what the hell just happened? And I go over to Financial Juice, and Trump is, as Signet says, chipping his teeth, and it just sent the markets. I was in an option that day, and my option just went flat. I think I lost like a couple $100 on it, and I was like, what the hell just happened? These things happen, but anyway.
So it's doable, guys. If you're struggling, document the struggle, ask in the chat. We are 100% here to help you. You're surrounded by so many traders, and I can tell you, I don't have all the answers. I do not know it all. I learn something new every day, but I've made so many mistakes, and I've tried hard to learn from them. So if I can share one of mine with you to help you avoid making the same mistake I did, then it's a win, right? We'll figure out why you're not winning and try to find ways to turn that around and get you to where you are winning. I'd say that's a good place to wrap up, huh?
Yeah, let's do a group session. We'll all sit in a circle, and and we'll all share our loss stories. And no, I'm being insensitive here. It can be frustrating, especially when you're newer traders and you're doing this death by 1,000 cuts thing. And I'll tell you what, though, I've said this over and over and over. We talk about the 90%, and everybody's got their. I know Signet and I don't see eye to eye 100% on my definition of why people fail in this 90% business or whatever. But to me, it's like, well, what makes up the 10%? Well, it's education and not quitting and keeping a routine and stuff like that. But sharing your losses is a good thing, but you do have to develop the thick skin. You just flat out got to develop the thick skin. And those losses that you take, if you'll stick with it, continue the education. We can't make promises, of course, because we don't know the future and we don't know you. But it's like I say, that 10% that do make it, it's about staying with it, keeping a routine, continuing to learning and adapting your risk profiles, looking at the different strategies. That's part of education. Developing your rules, sticking to them, different things like that. In my opinion, that dramatically increases your chances of success. But you got to take the losses because you'll learn so much from the losses sometimes if you'll take the time to go learn and say, well, why did I lose on this trade? Instead of just getting mad and walking away, you got to look at that loss and say, what did I miss? If anything, you may not have missed anything. One of the things I say of my 3 golden rules is rule number 1 is the goal is to make a good trade. And a good trade means that you've done your due diligence, you've marked up the chart, you've this, you've that, you've the other, you've set your take profit, you know where your stop is, you're in the trade. And if it goes against you, but you did your due diligence and you got stopped out, it's still a good trade if you did if you set it up right, because you're not going to win every time. I don't care how good you are with the chart. Or anything like that, because there's things that, remember, these are 5 or 6 different football teams on the same field competing against each other. There's going to be something that, we just don't see or whatever. But again, you got to do your due diligence. You got to stick with your rules, all that kind of stuff. And, you want to talk about somebody with rules? Signet has rules. I bet he's got them taped up on his wall, and he probably repeats his mantra. He's standing in the mirror in the morning, shaving, repeating his trading rules. Is that true? Is that maybe?
I don't kiss and tell. The idea, though, of these rules, they can help eliminate what I call forced errors. And you take enough forced errors, you just try to find solutions, right? Like getting into a trade and then realizing earnings is next week, or getting into a trade and realizing dividends are next week. That sucks, because then you got to go back in and take the trade off, or burn a PDT, or decide to wait. It's just all these different rules can really simplify your trading. They can make your trades more consistent. In options, consistency can be the key to everything. They always talk about how probabilities can be played in the options world, but if you're building each trade uniquely, then you have no consistency, and that means you have no probability. A trade only has a probability standard if it's the exact same one that you did last time. How does that equate when one might be ScanDisk and then one might be Costco and then Apple and then SPY, right? But if you're building it consistently every time, then all of those trades are technically the same kind of trade, and then your probability works, and you build
Yeah.
those odds in your favor. So you need the rules. Rules are
Yeah.
good.
And let me ask you this. Now, I'm going to play Captain Obvious here with you, Signet, but what's the typical duration to get a community college associate's degree? How long?
2 years.
And university degree?
Oh, like a associate's or a master's?
No, bachelor's.
Oh, 3 years, 3 or 4.
3 to 4. Okay. So people come into trading and they think that within 3 weeks they should be making money. We're talking about trading and something that can make more freaking money. If that's why you're here, if you're here for the money, you can make so much money in trading, it's not funny. But if it takes somebody 2 years to go through a community college program that they're hoping they're going to make $50,000, $60,000, $40,000, $50,000, $60,000, why should we come into trading thinking that within 2 weeks or 3 months that we're going to be knocking it out of the park? Now, to be fair, I thought that. I thought that within 3 to 4 months, as smart as I am, I'm a really smart person. It took me 3 years. Three and a half. So I actually figured it out. So much for my 3-month thing. I didn't get splashed in the face with cold water. I fell in the daggone sea of cold water. So we've got, it is a process. It is a process. And it's exciting. That's the thing, man. It's exciting. It's exciting, and blah, 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 blah. But it doesn't work like that. Set your expectations right. Come in, do your education. Show up. I don't care that you lost yesterday. You know, if you work your job and then you come in and you look at the charts tonight at 6 p.m. when you get home, then every night when you come home at 6 p.m., you're going to look at your charts. I don't care what happened yesterday or the week before, or whether you made money, lost money, this happened, that happened. You have that routine just like you have it for a job. It's just that this job can pay you an incredible amount of money, give you financial freedoms, all that kind of stuff. You know, but it's education, it's persistence, it's consistency, it's all that kind of stuff.
I just
Hey, Mercedes, what I was saying
posted
this morning is that I've only been day trading for a year. I've actually been trading for a lot longer than that, but it's been more of a swing, or a lot longer. And what I was saying this morning is that this market is totally different since COVID. So you cannot do what you were doing prior to COVID. That's all I was trying to get at. Swing trading, exactly that. I've just gotten eaten up. So yeah, I mean, as far as trading stocks and shares, it's totally different. This is a totally different environment now. And
you're absolutely right. You're absolutely right.
So yeah, I mean, for me, I've always looked at longer term charts and just kind of had the notion of where stuff is going. But as far as day trading, it's a totally different environment. I know you talk about practical and everything like that, but it's totally different than what it is on an actual longer term play. Buy and hold.
Okay, I was not preaching to you or anything. I didn't know you were in the room.
Yeah,
I was preaching in general. But yeah, now you and Signet need to hook up as far as kind of stuff, because Signet is going to be your best coach here, without a doubt, because you've got some experiences and you've got some different things like that. So I highly recommend that you have a conversation with Signet about things that you want to do, because he does swing trades, he does options, he does regular trades, futures trades. Signet does a little bit of everything, and he's god-awful knowledgeable about all of it. So with a lot of experience in there. So I think you'll benefit tremendously if you and you're not the normal person we get into the group. And I'm not trying to say you're different, whatever. A lot of the normal people we get in are the people that they've heard about the excitement of trading futures and things like that, and they want to quit their jobs and all that kind of stuff, and that's fine. I've got no problem with that. But your background's a little bit different, so a lot of the normal stuff we talk about is going to be, listen, says that doesn't apply to me. That doesn't apply to me, and that's kind of going to be the case. But you can have an incredible mentor if you and Signet will have a conversation outside of that about what you're comfortable with, what you might want to do, and stuff like that.
But it does, Marzini, that's just it. It does apply. But I can't stick around. I actually got to go. I got an appointment. I got to be at 5. So, but I appreciate you guys very much.
the market in the last 12 months, there's been a lot of talk about how we've had to throw our rules out the window on profit taking, because this market just runs and runs and runs, exceeds every level that it should exceed, and just keeps on running and running and running. I've talked to so many people who said the only reason that they were profitable last year is because they didn't follow their rules, and they did not get out where they should have, and they held on longer for more and more and more and more profit, which is not the norm. You're supposed to get the hell out, lock in your gains, and go to another trade. And yet things like Alcoa, it's just been on a tear, and they just kept going. But on the same side, the losing side, things that should have stopped falling didn't stop falling. They just kept on going. And it's been one hell of a year for traders if you weren't able to adapt to the new system. As for the changes since COVID, my database of trades changed radically, because I had all these mechanical weekly trade systems that I can't run anymore. They're broken. They just don't work. And I can explain exactly what changed and where it changed and what to look for to see if the change ever comes back again. But systems that were in place don't function. Add to all of that, what kind of Fed regime are we in? And that's a really key piece. When we are in a Fed that provides forward guidance, the swing trade environment changes completely. It's smooth seas, calm sailing, beautiful trade opportunities everywhere you look. It's like the sun is shining, but without that Fed forward guidance, we're in this stormy weather where we get squalls that kick up and knock price around and drive us silly. One day sunny, next day rainy, and you can't tell what's coming from one day to the next. And then you get the outrun on both sides where it just keeps going and way beyond its expected move, its boundaries, its standard deviations, and just keeps right on going, doesn't even care. So it is a tricky environment, but there is a system for every kind. And it always comes back down to risk, recognizing that some trades are riskier than others, trying to avoid the higher risk trades, patience for the opportunity to take advantage of the lower risk trades. And it's a hard environment to find those low risk trades right now. It really is. We don't have any new themes that are developing. All we've got is the same old themes that we've been running. There's some winks that we might be seeing changes now in the AI dominance, going from build out to actually starting to monetize, and that's going to bring some changes. And then, of course, it's hitting healthcare and biotechnology. Real estate's taking advantage of AI, so it's spreading out, but it's still a really crowded trade, and we don't have great new themes yet. So, without new themes, without Fed forward guidance, with this president who still decides that disruption is the best process forward, that makes it for the most extreme and dangerous trading environment for anything beyond the common day trader. And that's why so many swing traders are just fed up and frustrated because their systems aren't working.
Absolutely. I have been baffled. I'm one of these people that's absolutely baffled at the markets and the fact that they're so overextended. And or at least, like you're saying there about stuff that just kept going. Because I've been sitting here waiting for this pullback. I even took a put months ago. It's expired, worthless. I went long on a put against the SPX, and I think I lost about $3,000 on it. I was like, ouch. But because I was expecting this, where's this turnaround we're expecting? And it didn't happen, and I was pretty irritated over that one. But there's a lot of things that are broke. The markets go up, and gold goes up. That's not supposed to happen. Silver, my good gosh, and all of a sudden silver got so runaway crazy that the spot price and the over-the-counter price, the spot price was like $50, and the over-the-counter price was $80 to $100. And it's like, that's not supposed to happen either. So there's so many things that are not supposed to happen, and yet they are. So we kind of have to figure out, is this some kind of a new norm? And if it is, we got to figure out what those rules are. And if it's not, my God, if there's a pullback coming, it's going to be hellacious, I think.
I'd say we wrap it up here, guys. We're going to be back on Friday. If you got topics you want to hit, as always, throw them at me. If you don't, I'm planning a deep dive on Friday. Going to go through the macro charts, take a look around, see what the risks are. Maybe talk a little bit about Japan. I've always got something if you guys don't, but we'll find something to talk about. Other than that, the replay will be in the replay channel. I'll be back in the morning for the morning briefing, and we'll do it all over again.
Joy to you, brother. We'll see you then. Thank you. Thank you for the hosting today and taking the time and talking with everybody, and always good words of wisdom from you, sir.
I always appreciate when you drop in. It sometimes seems like I'm just chatting at the wall, and so I always appreciate it.
Yeah, I get that. I get that. I had maybe one or two people in my stream last night, but it was recorded. So, and I do see the statistics where other people do go look at it